Hey guys, how you doing? It's been a while since I've done this, but I've been meaning to do it for a while, and I've been quite busy on other things. So, but I want to do kind of a short video on just hopefully a short one, on how to use the Cypher pattern to trade basically, right? I think it's a really powerful pattern. I've used it, I've back tested it. I've got proven results that prove, how successful you can be if you just trade just this pattern alone. Okay? Now the Cypher pattern is kind of sitting under the advanced patterns family, right? So the other patterns you have is you've got the back pattern, right? There's the Gartley pattern, and there's the Cypher pattern, and there's the crab pattern, and there's a butterfly pattern. I don't really focus on those ones. I only focus on the Gartley, the bat, and the Cypher. Okay. The good thing about the Cypher is, it's got a very high percentage win rate, right? If you trade it properly, if you trade it by the rules, which the rules are pretty simple. But if you trade that day in, day out, you'll find that in the long term you'll be profitable in the long term. They appear on any time frame, so it doesn't matter if you trade a 5 minute, 15 minute, 1 hour. They do come up on the daily, but obviously the daily ones rarely don't come up as often. But if you trade the 15 minute, the 1 hour, even the 4 hour, you get a fair few patterns that appear. They appear on pretty much any market, right? So mostly I look at the forex market, so they appear pretty much any currency pair. You'll find it there. Even the other markets, if you trade, say the index markets like S&P 500, even the ASX 200, you'll find them there. If you trade gold and silver or oil, there too. Even stock markets as well. Now, the thing about stock markets is I don't trade them. I rarely really trade them, so I do see the patterns come up, but I don't take every single one all the time. It's just too much to manage, right? But it's very simple. It's got a simple set of rules. The rules that I've got shown you here is pretty standard. My rules are a little bit more tweaked, but this is pretty much the general standard rules that you would apply. If you follow this, look, put it this way, like I did the back testing on a few currency pairs, the maximum I got was, I think, I can't remember which currency, I think New Zealand USD, I think, or Euro, and I've got about 80% return win rate. So 80% of my trades were winners. As in, when I say winners, I mean at least it hit target 1. All right, so that's what I mean by that. Right, it doesn't mean it hit target 2, but it put me in a winning or break even, mostly a winning position. Because by the time it hits target 1, I'm already moving my stops to above that break even. So I'm always in a winning trade there. It's 80% win rate's pretty awesome. So, I think there was one pair where it was the lowest win rate was about 55% or something like that. So you can't really go wrong with the Cypher pattern. The only bad thing about the Cypher pattern that puts me off is the fact that the risk to reward tends to be inverted. Right, now I'll explain that later. But yeah, I reckon anyone can trade this, and you can just trade this one pattern. This is your one pattern, your one strategy. You can trade for the rest of your life, pretty much, right? So the hardest thing about this is probably at the start when you're trying to find the patterns, because naturally your mind or your eyes don't pick them up when you look at it. When you look at a chart, you can't find that at all. But when you'll find out, the more you look at it, the more time you spend on looking at the charts, you'll start to pick it up. You'll start to see them everywhere, right? And it'll just become second nature, right? So that's the hardest bit. But like I said, that all comes down to time and just putting in some hard hours and looking at the charts, and then over time you'll start to see patterns. So I won't go into, I'll just get into it just now. So just look at the rules here. It's pretty standard put requirements in. What do I mean by requirements? It's just basically what other tools you might need to be able to use to be able to find these patterns. And I'll put Fibonacci retracements and extensions. Very powerful tool, very important. And I won't get too much into what these are, but Fibonacci retracements is basically, using that tool to find where price will, as price reverses, right? We're looking for levels at which price action will retrace back to, and you'll find that Fibonacci's there's a high percentage of them, probably 90%. 90% of the time you'll find that price does go back down and test a particular Fibonacci level, right? It doesn't mean it's going to go back there and reverse. It just means that it's going to go back down there and there'll be a reaction, okay? So that's where you use Fibonacci retracements. The extension is where you would look for price to potentially trade up to, right? So you're looking for areas of reversal at the top, okay? So as price moves up, it retraces a little bit. You're looking for using the tool to find levels where it might move up to next. Right? And I'll show you that. Won't go into too much of that, but there's heaps of videos there. I've got a few videos as well on YouTube as well. I think that talks about retracement. So the rules are pretty simple. You're looking for an impulse leg, right? Initial impulse leg. Then you're looking for an A to B, and then a B to C, and then C to D. And that completes the pattern, right? And then you've got your entries, stops and targets, so your rules of engagement. And these are really, really standard rules. And I've put this together quickly, so I might have got some of it wrong, but we'll go through it one at a time and see how we go. So the Cypher pattern pretty much it's pretty much a continuation pattern, right? So as price action moves up, you tend to get a pullback, right? And then some kind of continuation, right? Now, I won't go into too much detail about it because it'll just confuse you, but once you learn the pattern and you use it and you get used to identifying the pattern, you get used to using it, pretty much becomes second nature to you. You'll start to develop your own set of rules around this, right? Now, this is not going to work for everyone, but I've tweaked my trade plan to my rules around the Cypher, to basically caters to my, personal or financial needs, basically, or whatever. So you'll find that, you'll probably see each other like, well, why don't you enter here? Why don't you enter there? Why don't you take the targets there? Why don't you take it here? The point is, it doesn't really matter how you formulate your rules as long as you follow the rules. That's the most important. And you avoid changing things up too much just because you've had a few bad trades. Okay? So I'll just give you an example of what I mean. So let's just say so initially for the A to B, for the X to A leg, you're looking for. I'll do a bullish Cypher pattern, right? So there's a bullish and a bearish, right? So the bullish pattern, you get your initial impulse leg, right? So your rules X to A, initial impulse leg. So that gives you the A to B, right? I mean X to A, sorry. X to A. So that's your initial. Now again, I won't go into too much what an impulse leg is, right? There's heaps of information online about that. Get your initial move up, right? And then what you do is you get your pullback, your reversal, right? Okay, so which gives you the X to A to B, and then you get your B to C, right? B to C there. Okay, and then you get your C to D, right? So I'll just draw this first. So you get to C and then to D. Right? So once you get this, you get B to C, C to D, and then it's pretty much just forming a pattern together like that, right? That's what you call your Cypher pattern. Now that's what I'll do is I've just drawn that as an example. What I'll do now is I'm going to show you using an actual tool. I should have used the tool actually. I don't know what, it doesn't matter. Regardless. But it's a continuation pattern, right? Not a counter trend pattern. So I'll explain more about that later. But X, A, and B. Sorry. Okay, that's better. All right. So that's just Cypher pattern, right? Now, when you look at this, when you can see the pattern here, but once you look at it in the chart, it's impossible to find this kind of stuff. So, and I'll explain it one by one. So your X stage initial impulse lead, right? Now the A to B is where you use your Fibonacci retracement. Right? So your A to B, right, according to the rules, is that it has to at least touch a 38.2%, right, and go as far as the 61.8%, right, which is here. But it cannot close, right? The candlestick, which I'll show you later, cannot close above or close beyond the 61.8. Right? So the A to B leg can go anywhere from here, the 38.2, right, to even the 50% or whatever. It can even touch, right? Even the wick if it can go all the way down here. The wick can go to even the 78.6%. But the candle cannot close beyond the 61.8. Right? I'll show you that later. So that's the first requirement. The second requirement is your B to C leg, which is where you need your extension tool. Right? So your extension tool is from the X leg, right? The X leg all the way to the A leg, back down, and you get your extension. Right? The rules are basically it must at least touch this 127.2%. It can go as high as even up to there if you want, right? It can't cross above the 161, and again, the candle cannot close above the 141.2%. Okay, so you can go here, up to here, even up to here. They can't go beyond that, but you can't close above the 141, right? If it does violate that, that means the pattern's broken. The pattern's invalid, basically. Okay. And then the next move is C to D, right? Which is basically C to D is your 78 point is from the X leg. So you draw your Fibonacci retracement from your X leg all the way to your C leg, right? And the rules basically state that it has to at least touch 78.6%, right, for a valid entry. So once you get this, pattern's confirmed, you've got an entry. You can enter the market right here. Right? Now, price can still technically go down further, right? It's allowed to, right? As long as it doesn't violate, right, the X leg, right? So once it violates that level, the pattern's invalid. Okay. But it can pretty much go anywhere here. So you can technically, you can change your rules however you like. I wouldn't do that, but you can trade as low as down here basically. Now setting stops and targets, right? So let's get rid of that. So your stops, right? I mean your targets are drawn from the C leg, right, down to your D leg. So C to D, I've got it in there. Draw from C leg to D leg. There you go. Swing. I've got it here from the swing low to swing high, but that depends if you're looking at bullish or bearish. For this example, we're looking at bullish, looking from the swing high to swing low. Okay. Once you've done that, you've got your 61% and your 38%. Right. Targets. Target 1 will be at 38.2. Target 2 will be at 61.8. Right. Now these are standard rules. Like I said, you can once you get more experience, you can tweak the rules however you like to fit this needs. So that's target 1 and 2. The stops would be at least 10 pips below the X leg. So I'm I'm not going to measure it. I'm just going to basically just draw a rough one here. So stops. Okay. Stops there is drawn in red. So and targets in blue there. So let's say your entry is here. Move this all right. So that's pretty much the rules there. Pretty basic, like I said. It might be a little bit confusing initially, but once you do this quite a few times, then you'll be like second nature. So now I see these patterns appear all the time. So I don't take every single one of them, but yeah. So basically, what happens is when you enter the trade, say you get a trade, you enter at market or a limit order got executed. What happens is you're looking for price to obviously hit target 1 first, right? So initially, based on that example, you've got, Paul, I should mention is the risk reward. So like I said before, how the bad thing about the cycle pattern is that it tends to be inverted, the risk reward. So you're actually risking more to gain less sometimes, right? That's the bad thing about cyphers. But because they've got such a high percentage win rate, it doesn't really matter too much. This one in this case, I think just has just under a 1-to-1, so it's not too bad. So what you're looking for is for price to at least hit the 38.2. Now, when it hits that target, what you want to do is you want to close a portion of the position, right? It doesn't matter. It's up to you how much you want to close. But let's just say you close. Let's say you're trading 2 lots, right? You're trading 2 lots, and one lot will be closed at target 1, right? One lot closed at target 2, right? So what you want to do is, when price hits that target, you close one lot, right? Your stops would then be moved to be at break even. Now what I do is I usually move it to about maybe 3 to 5 pips above where I entered. The reason I do that is because it's not break even unless you have your spread covered, your commissions covered. So even though I hit target 1, I've got profit. I've moved it here. I want to make sure that I'm guaranteed to be at least break even. So if the trade does reverse back down and stops me out, at least I've covered my spread, I've covered my commissions and all that stuff, right? So I'll break even trade, right? Better than a losing trade. The next thing you want to do is watch for price action to at least hit target 2, right? If it hits target 2, then you close the remaining position. Now, again, this is going to be, like sometimes I have rules in there to look for extended targets. So I always close at least at the 38.2. 61% I can close it, but I do also look for extended targets, okay? Or at least I leave a small position for extended targets. So that's the basic premise of the rules there. So it's pretty basic. So I've got the rules here, and if you want a copy of it or something like that, I've actually got a proper PDF of it. I can send that to you. Don't copy these ones, but there's more details in the other rules I've got. But basically, that's really all it's about, really. Like I said, these on average these complete. You're in a winning trade probably pretty much 70% of the time on average. You should be, right? Now there are periods throughout the year where you might go through a bit of a slump. That's where you're going to be careful and not change up too many things because no pattern is going to be 100% working all the time. It'll go through its periods. But yeah, it's this. I'll go through some examples actually, and I'll show you. I'll delete this and we'll go through, say, Aussie Euro USD. It's a common pair to trade. And let's have a look at the. Let's look at the 15-minute where you'll probably get more come up. Okay. So, like I said, this is the hardest bit pretty much. This is where you have to kind of find them. Train your eye to actually find these things, right? And like I said, once you, it's not just the Cypher, but you kind of got to have a good knowledge or understanding of just the market itself. So understanding support resistance and structure and all that kind of stuff, because that's going to help you build a case, right? Because not every I do trade a Cypher pattern a lot, but half the time I actually don't trade it. I actually use it more for analysis. I might have a trade setup that I'm looking at, and Cypher pattern happens to be around there, and I use that as additional evidence for me to look for a trade entry. Right? So I don't necessarily use them to trade all the time. I use it for other techniques as well. Right? Predictive analysis is a good one. Because sometimes what you'll get is like a whole series of these patterns. You'll get like 4 or 5 patterns within the same area, and you're like, well, what do I do? Right? What do I do? How do I trade this? Right? But then you can use that in your analysis and how to where you can predict the next moves, right? So I actually thought I'll go with GBP Aussie USD because I actually think I remember there was a lot of patterns that appeared on these ones. All right, so let's look for a Cypher pattern. So bear with me, right? Well, I'll look for one of these things. I've already found one already. There's probably a lot more, but let's just go with this one. So let's see if this one's a potential pattern. So I'm looking for price to at least touch the 38.2, which it has. But it can go as high as 61, which it doesn't, which is good, right? So that's my first signal there. Now what I'll do is I want to look for the B2C level. So I'll use the Fibonacci extension tool. Sorry, let me do that again. Sorry. So what I've done now is I've confirmed the impulse leg, right, which is here. Okay. Picking this up there. So I've got my initial impulse leg, so your X2 A. Right. So that's been identified. Then I've already identified the retracement being at least a 78.2. I'll be 38.2, but doesn't even go beyond the 61.8. So that's the second one. So that's your A to B leg. Now the rules for the B to C leg was that it can at least touch these 127.2 and 141.2, but cannot close beyond the 141.2. So there, Fibonacci extension from the swing high, which is the X leg in this case, to swing low. Now you can see here that it doesn't actually touch it, so therefore the pattern's not valid at all, right? Just not far off, but it's not valid. Now the reason why this was, this could have been a pattern because you could have pretty much, we had a completion around here, so that could have been a trade entry, either way. But again, these are the rules, and they're the rules. That's it. So we'll just look for another one. They're quite common. So sometimes sometimes I'm doing these videos, I'm trying to look too fast. So I'll probably pick one up later or soon. Okay, here we go. Here's a possible. Let me just measure this up. So let's have a look at does it meet? So we've got an impulse leg, which is here, right? I'm not going to draw in the X to A to B, like I'll draw it as I go. So you've got the initial impulse leg. So X to A, then A to B, right? Which does cross with the 38.2 minimum. It doesn't go beyond the 61.8, so that's a good sign. So let's have a look at the extension. Swing low, swing high, back down, and boom, you got at least touching the 127.2, and it doesn't go up above the 141, so that doesn't matter. So we've got a good B to C leg, all right. So I'll just draw that now. X A B and C. So now we're looking for the D leg. Okay? So I'm just going to delete this. So your D leg is from your X leg all the way to your C leg. So you get a completion right there. So this, in this case, it doesn't touch it. But remember, this can go on forever, right? It doesn't really matter how far this goes on. So if I'll just move this cursor over a bit, you actually find that we get completion at this level. You do D leg, completing leg. Okay. You get the Cypher pattern as so. Okay. Now, so you get your that. So that's your Cypher pattern. Alright. So now we've got a valid entry. So we can adhere at this point, as soon as the market touches the 78.6, you can enter at market right away. Or you can set a limit order and then wait for the price to actually hit it and then you can enter the trade. Now stops always go 10 pips, at least 10 pips below the next leg. Right? So you've got, let's just say, I'll just use this. In this case it was 24 pips, sorry. Doesn't seem like much, but it's alright. So that's where your stops go. Targets. Where your targets go? Targets would be from Fibonacci retracement from C leg to the D leg. Alright, this is where it's important. Now, even though the price completed the Fibonacci, we've got a 78.6 retracement fulfilled. Price still kept going down. Okay. Now, when this is the case, when you're looking at targets and stuff, when you're drawing from the swing high, which is the C leg, down to the swing low, you don't actually draw it all the way to the 78.6. Right? Not just that. If price keeps going down, you've got to keep drawing it down. So it could go down as here. You could draw the retracement down. Right? Don't just leave it there and think, oh, if I enter here, that's where my target is. No, you've got to wait for the reversals. And if price, say in this case, the price went as low as down here, doesn't mean you have to enter. You can still enter there, right? It depends on your rules. Your rules would tell you where you enter, or how much room do you have to enter. Okay? I won't talk about more about that. But based on this, let's assume that we're following that rule where we draw our retracement down to the here. You want to check the risk reward. Okay? So assuming that you enter here, or you will enter here, you're looking at, you want to make sure you've got the right risk reward. So you're risking all the way here. For your target one is up here. Okay? So your risk reward for the trade is pretty much a 1-to-1, which is good. So how many pips are you looking for in this case? So you're looking at potentially making 93 pips, and your risk is 96 pips. So the risk is 96 pips, and your reward for target one is to 93 pips. So just under a 1-to-1, like I said. Now, once it hits that, you'd be looking to close one lot, right? And the second lot would be for target twos. Right? So in this case, let's look going back. So we had price completed there. You entered the trade here. Price went down a little bit further, but then reversed back up. So as soon as you got there, you got your target one hit. Right? So you already got target one hit. Now, once you've taken profit, you move your stops up to break even, just above. I usually put a few pips above. Now what happens next? Right? So price keeps going up, touches the 50%, doesn't quite make it to 61.2, which is where your target 2 is, and then rolls over. As soon as it rolls over, hits your stops, and you're out of the trade for a break even trade. Right? So you pretty much made probably a few pips, to cover your spreads and commissions. So in this case, it was a good trade, but it didn't go the way we wanted it to, which is okay because that happens, right? Not every trade will be a winner. There will be losers. Just got to accept it, right? And move on to the next one because these opportunities appear everywhere. Right? I'll try to find another one now. Again, I found one there, but I won't use that one as an example because want to try and find pretty much. I think this one. This one's alright. Now I'm going to do this really, but I don't want to spend too much time on here, so I'm going to draw this really quickly. So I've got an impulse leg here. I've identified the impulse leg, so it's X to A and B, X to A. Yep. Let's draw my Fibonacci's. And I'm checking from here to here, and nope, don't move the rule. Just missed the 38.2, so it's no longer a valid trade. Right? Let's go scan around. Actually, this one's here. This one's on the 1 hour. I might have to move to 15 minutes, so let me just give me a sec. Just draw that so they just. Fine. Actually, I'll leave it on the 15 minutes. Okay. So, impulse leg. Boom. Okay. Sorry. X to A. For the minimum 38.2, we get that, right? We get that here when it violates the 64.8. I'm going to leave it this there, right? Just don't worry about that. And then I'm going to draw from the X to A back up, and we get. Oh, we just missed it. We just missed it. Let's see how we just missed it. See, even though we just missed this, the trade actually went our way, because if I draw this now, you've got price pretty much reversing right at 78.2. See, but it just didn't touch it. So what do you do in that case? Do you just ignore, go against your rules and then take it? You can. It's up to you what you want to do. It depends on what your rules are. But the standard rules, based on the standard rules, this is not a Cypher pattern. So you just have to suck it up and move on to the next one, right? And that's the hardest bit, to suck it up and just, accept it. Because once you start changing things up, because something didn't work, that's where you get to the problems, right? But let's move on. Let's find another one. And again, I'm just going through this really quickly. I'm pretty sure I've probably passed up about 10 of them already, but I'm just really trying to scan through these as quickly as I can, so I don't want to spend too much time for the video to go on too long, I guess. I'll do this actually. I'll go 5 at a time, right? Big heaps on those ones. They'll be everywhere, I think. Alright, so. Alright, so we're going to 5 minute time frame. Now, obviously, time frame 5 minutes, there'll be a lot more of them, but the profit margins will be a lot less. That's obvious. But get some close ones. I do know that there are quite a fair bit of these patterns on the Euro USD. There's one here, but this one doesn't produce a winning trade. Comes close, but let me just double check. No, it doesn't mean it just misses. Bear with me. I could have done this before, but I kind of wanted to do it on the go, and that way you can see what I'm doing. Didn't want to be too prepared. But these do appear, like at the moment it doesn't seem like there's much, but I'm scrolling these pretty quickly, so do get completion, but okay, here we go. Switch. Just double check the measurement. Alright, this one's alright, so here we go. So let's find the impulse leg, which is here. X to A and B, X to A, right? I'll draw the measurement there too, so that's fine. Let's hope we get one. Okay, so now this one just almost touches the one 61.8, so it's still good. That's a good one, so that's valid. I just drew the extension there, so I'll draw it again just so you can see it. So the swing high, 2 to swing low, back up. Right there you get 127.2, so that's valid there, that point there. So I'll draw from this, which we already got. And then we'll draw all the way down there. Now next we're looking for a CD leg. So at this point you will draw from the X leg all the way down to the C leg. And you're looking for 78.2, which you do get, it does cross above it. It goes well beyond that actually, but doesn't violate this level, right? So this level here, right, doesn't get violated. So it's still a valid trade. So I'll draw that here, then completes the pattern, so you get your Cypher pattern, okay? Now, like again before, I was telling you, when you draw your targets from the C to D, you don't draw it right at where it completes. You have to kind of follow where price actually reversed in this case. Let's assume that we took it here. Right? Now this is where it's interesting. You can play it two ways. Right? This is similar to the last one I showed you, because if you take the trade here, right, your target 1 is there, your target 2 is there. Right? It hits target 1. You move your stops above, down to the just above the break-even level, right? And then what happens? Price reverses and stops you out. So you're in a pretty much a break-even trade again, right? But there's a couple of ways. See, once you get more experience, you'll start to craft different ways of doing this, right? So what you can do is you can change your rules and say your rules is, okay, I'll enter here, I'll take profit here, but if price does reverse back up, right, I'll set another potential trade entry here, right, to capture the movement, right? And then I'll place my stops here, because even though I'm taking the trade here, like I'm really not risking that much. So you can play around however you like. There's heaps of different ways you can play this. Because if you just went strictly by the rules, and you got stopped out, and that's it, you didn't take the trade anymore, you would have missed out on this kind of move, right? That's a good move, right? That's massive move. So what you can do is you can tweak these rules around and say, okay, I'll take it, the Cypher pattern as it is. If I hit target 1, I'll take close half position and so forth, do what the rules say, but I'll also look for a potential reversal down to the 88% or another to 100%, and look for another entry. If right, price doesn't get violated, price doesn't get stopped out, because price could just simply do this sometimes, right? Just go down like that. Retrace big back here maybe, and then go back down. That's what it does. So this, you can tweak it however you like, but yeah, guys, this is pretty. I'm only showing you a couple. I can show you more, but I don't want to spend too much time on it. But yeah, just go through your charts, and have a look. You'll find the heaps of them. They appear everywhere. So there should be no shortage of Cypher patterns around. So, and just looking at it here, you're going to go to a higher time frame with this one, but I've just found another one. 1 hour probably more clearer, but and I'll just double check the extension levels, swing low, swing high, back up. Meets the rules, that's fine. So, which tells me that we've got a Cypher pattern here. Let's try to 78.6. Again, it crosses above. Now again, same thing. I've tweaked my rules around a bit too. Like I'm looking at I used to look at the 78.6%, but now I'm kind of looking at the 88.6. I've been back testing that, so hopefully soon I'll get some results. But yeah, again, it can, as long as it doesn't violate the X leg, this is all valid trade. Okay? And what does it do? If we use that Fibonacci to find targets, right, all the way up to where it actually reversed, which is there, and you would have been for target 1s and target 2s, and what happens? Stops go there. As soon as target 1 gets hit, what happens? We move our stops just to about break even level, which is no, that's where I stuffed up to. That's our entry. Sorry, I moved them here. Doesn't matter. And then what happens as soon as you hit that? Now the problem is in this case is again it stopped us out. Right? It stopped us out. This is the problem. And this is what I've noticed lately in some of the patterns. But again, there's not much you can do about that. So, but eventually it does reverse and go to hit target 1. So I think there might be a change in the market. Okay, I'll leave it at that. This video's gone for quite a fair while. So hope that helps, guys. And got any questions, let me know. But I'll try and do more of this as I go. It just takes a little bit of time. But I like this. I like doing this kind of stuff. It's like helping people kind of learn the skill. It's very beneficial. Very, trading is not really. It's hard, but it's not as hard as people think. Right? So it just requires a lot of basic things. Hard work. Just put in the time. Really. Not many people really want to put in the time for anything. They just expect things to happen faster. It just doesn't work like that. So, yeah. All right, take it easy, guys. See ya.